If you want to know everything that there is to know about credit scores, you're in the right place because in this video, I'm gonna break down beginner information to advanced. Make sure you watch this entire video because depending on where you are on your credit journey, the information provided here will show you exactly what you need to know about credit scores. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start now by subscribing so you don't miss out on any future videos. So first, let's cover what exactly are credit scores. In a nutshell, this is just a 3-digit number where it ranks you from 300 all the way up to 850. Obviously, the higher you are on the spectrum, the better off that you will be when you want financing or credit. There are a bunch of different types of scoring models where the range can actually go up to 1,000. But in general, 90% of all credit companies and lenders, they will use the FICO scoring model. There are a few apps that may offer you a free credit score, but the majority of them, they will offer a Vantage score. If you are familiar with Credit Karma or Credit Sesame, these are the free applications that will give you these type of scores. Vantage scores do give you a pretty good estimation of what your credit scores will be, but it's not 100% accurate. Even within the FICO scoring model, they have a bunch of different flavors as well. There's the classic FICO scoring model, and they also have enhanced scores, such as particular ones for your credit cards, auto loans, and your mortgages. So depending on what type of financing or credit that you're trying to get, lenders will look at different scores that pertain most to them. So why does your credit score actually matter? Depending on your financial situation, for the majority of us out there, your credit score plays a big factor in our everyday lives. The most obvious use of credit scores is to get financing. But aside from that, where credit scores will play a factor is if you ever wanted to rent an apartment, or you were looking for a job, or even when you're trying to get insurance. By looking at your credit scores, they will have an overview of how responsible you are as a person. People who tend to have lower credit scores may look less responsible during the job hiring process, and they may drive more recklessly. Even though these are pretty sad assumptions, but it's just how the world works when it comes down to money. Since FICO scores range between 300 to 850, scores higher than 720 to 750 is where you want to be. Generally around this range, this is where you would qualify for the highest tier of credit and you'll be able to get the lowest interest rates. If you guys ever see car commercials where they offer 0% financing, these are for individuals who usually have tier 1 credit. So if you have any higher scores than this, all it really is just bragging rights. Credit scores are not everything when it comes down to approval, just mainly due to the fact that there are other underwriting factors such as your income and current debt. Now, since you guys have an understanding of what credit scores are and why it does matter, now let me give you a complete breakdown of the FICO scoring model. The biggest chunk of your credit score is going to be your payment history. This is 35% of your overall score. Essentially, this is how you make your payments. Any late payments drop your score significantly. Late payments, they're defined as any type of payments that are made after 30 days. This also includes collection accounts, charge-offs, bankruptcies, judgments, liens, and child support. This is the portion of your credit score where you really want to pay close attention to. I always advise paying credit cards in full every single month. But if you're unable to, just make sure that you do pay the minimum payment. You never want to be late for any type of credit card or type of loan. Because once you are late, this can drop your points 50 to 100 points overnight. The thing about credit scores is that new information has more of an impact on your credit score rather than information that was done years ago. So if you have had any late payments within the last month, this is going to be a huge toll on your credit score. It's probably going to take a couple of years before your credit score will start climbing back again. Now let's talk about the next biggest factor to your credit score, which is your credit utilization. This portion of your credit score plays about 30%. This is rather a simple idea, but many people still have trouble wrapping their heads around this. All utilization is the amount of money that you owe. So let's just say that you have a $1,000 credit limit and you decide to buy the new PS5. You have a $500 balance on that card. But if you wait until your statement closes, this will get reported to the credit bureau as having 50% credit utilization. The lower that you keep your balances whenever your statement cycle closes is much better off for your credit score. A general rule of thumb is to keep your utilization under 30%, but ideally 10% or less is better. Just because you have a $1,000 credit limit does not mean this is all you can spend on a given month. You definitely can spend more than that. But if you wanted to maximize this portion of your credit score and you need to make a large purchase, pay some of it off and just keep a little bit until your statement closes. Then once you receive your statement balance, this is when you just pay it off in full. Of course, this becomes a little bit more challenging when you have multiple credit cards. So it's probably best just to keep it simple and keep it on auto pay or just pay your balance in full every single month. Going this route will no way hurt your credit score, but it does not benefit quite as much compared to the previous method that I did mention. But I'm all for simplicity. If you guys like it that way too, go ahead and just pay it off every single month and just keep the balance at zero. One of the quickest ways to bring up your credit score is just to get rid of your balances. Now let's talk about credit history or your credit length. In a nutshell, the longer that you keep your accounts open, the better off your score will be. Your credit history plays about 15% of your credit score. This part of your credit score can be a little bit difficult when you are just starting out because you really don't have credit and it can be difficult to get credit. It's like applying for an entry-level job, which requires 5 years of experience. But there are other ways to increase your odds of getting new lines of credit if you are completely new to the credit game. You can either apply through your own personal bank or your credit union first. They tend to be more friendly with those without credit since they already have access to your banking information. There are also plenty of other credit card companies where they are more targeted towards individuals who are new to credit, so they may just require bank statements so they can prove that you're making enough money. Another route that you guys can take is to get added on as an authorized user. This route will work best whenever you're trying to get added on to a family member's account. The key reason on why authorized user accounts work so well is that essentially you adopt that person's credit history. Of course, you really want to get added onto a person's account if they have a great history and they have a high credit score. There's really no point on getting added onto another person's account if their history is not all that great. But moving on, the longer that you keep your accounts open, the better off that you will be. This mainly pertains to credit card accounts. But when it comes down to installment lines of credit such as loans, it is best to get rid of those as soon as possible rather than stretching them out. The way your credit age is calculated is by getting the average of your oldest accounts and your new accounts. So whenever you do get a new credit card, you tend to see a dip in your credit score. There are two reasons. Your credit age is now younger, and this also results in a hard inquiry, but more on this later. For those who like to open new credit cards just to get the bonuses, once they get that bonus, when you close that card, this will still affect your credit history. Closed accounts will remain on your credit report for at least a minimum of 10 years. I don't think that many people realize this, but even when an account is open or closed, it's still going to affect your credit score. Now let's keep it moving with my next point, which is new credit. This portion of your credit score tends to have a negative effect and it contributes 10% of your score. So every time that you apply for new lines of credit, you're gonna see a dip in your credit score. This will affect a few months all the way up to a year, but generally after a year, it will play less of a factor. And hard inquiries, they remain on your credit report for at least 2 years. So don't apply for new lines of credit unless you really know that you can get it or you really need it, because a bunch of unnecessary hard inquiries does hurt your credit score. The key reason behind this is that lenders and creditors, they will see that you're more desperate to get credit. And when they smell this, your application will most likely get denied and your score will be affected. So if you are needing new lines of credit, such as a loan or a credit card, always go through the pre-qualification process. This will give you the best estimate whether or not that you get approved. Most credit card companies and lenders do have something similar to this, so it is a good option to take. With these types of applications, this will result in a soft inquiry. Soft inquiries have no effect on your credit score at all, and you can do this all day and nothing will happen to your score. Many credit card companies and free credit scoring apps such as Credit Karma, they do a soft inquiry on your credit report every week or whenever you check your score. So to clarify, soft inquiries have no negative effect to your credit score, meanwhile, hard inquiries do. Now let's talk about buying cars and homes. The thing about these is that usually when you apply for these type of large loans, you typically want to shop around to make sure that you get the best rates. Whenever you go ahead and apply for these type of loans, you want to keep your shopping within a 2-week time frame. The key reason behind this is that they will pull your credit multiple times. So it's not unheard of to see 10 to 15 hard inquiries on your credit report. But when they are really close to one another, this will only result in one hard inquiry, so it will have less of an effect on your credit score. So within a 2-week time frame, whenever your credit is getting pulled, your credit will be suppressed for the next 30 days and it won't affect your credit score too much whenever it is getting pulled. Now let's talk about the next portion of your credit score, which is your credit mix. This is the diversity of your credit lines. This accounts to 10% of your credit score. This can be revolving lines of credit, such as credit cards, and installment lines of credit, such as loans. A quick rule of thumb is that whatever type of credit that you are seeking, your previous history in that particular credit will play a bigger role. For instance, if you're trying to get a new credit card, your history in credit cards will be a major player. The same goes for loans. If you wanted an auto loan, they would like to see how you've done with previous loans, if you had any late payments or repossessions. If you are newer to credit and you really don't have that many diverse credit lines, you can either get a secured card or a secured loan. These are two great credit building tools that anyone can use. Now, using the information that you do know now let's talk about what brings your score down. The two biggest factors of your FICO score is your payment history and your credit utilization. Having any sort of late payments, any accounts that went to collections are charged off, and having high balances on credit cards will have a huge impact on your credit score. So when it comes to loans, even having high balances on certain type of loans, such as personal loans or payday loans, will have an impact on your credit score as well. For loans such as mortgages or auto loans, since these loans are a bit larger, the balances do play a small role, but payment history is key for these type of credit lines. There are also times where there are incorrect information on your credit report. This has happened to me in the past, and this kind of what led me to learn how to repair my own credit. But anyways, you should be reviewing your credit report at least once a year to know what is exactly on it. If there's any misspellings on your account or incorrect balances reporting to each one of the credit bureaus, then obviously one of them has to be wrong. In addition to reviewing your credit report, just make sure that your personal information is clean. You want to make sure that you have the most up-to-date names and addresses. So by actually having a bunch of different type of name spellings and addresses can actually slightly bring your credit score down by a few points. Being stable and consistent does play a factor in your credit score. Now let's talk about the type of information that is not calculated on your credit score. This includes your race, your religion, sex, marital status, age, salary, occupation, where you currently live, and any sort of information that is not on your credit report. Essentially anything that can be used to discriminate against you. Now let's talk about how often your credit score actually changes. Believe it or not, credit scores change every time it is pulled. If you had your credit pulled today and 2 weeks later it gets pulled once again, these scores can be completely different. The key reason behind this is that this is just a snapshot information of what your credit score is currently compared to everyone else. So let me give you an example. Let's just say that you're in a physics class, and since it's so difficult, there's a grading curve. Meaning that depending on the outcome of the test results will determine your grade. So if the smartest kid gets a 75 will be an A. This is no different when it comes to credit scores. How your credit score is determined is relative compared to everyone else. If everyone else in the world has super poor credit, meaning that they are consistently having lates and high balances, and if you're the only person who only has one late and maybe a 30% utilization, you probably could have an 800 plus credit score. Of course, in this example, this is a little bit extreme, but just keep in mind that credit scores are relative compared to how everybody else is. If everyone is super great with their credit and no one ever has a late payment and you had one late, your credit score would sink like a rock, just due to the fact that you are being compared to everyone else. So with all the information that we know so far, here are a few key factors that you will need to know when you want to build your score. The first thing is to always make your payments on time. If you have had any late payments, build up a series of on-time payments and ask for a goodwill deletion. This is generally best when you have established a loyalty with this company, and based off your loyalty, they may be nice enough to remove it. But this may not work all the time, but it is worth a try. The next thing that you need to try to do is to keep your balances low. If you are having difficulty paying off your credit card debt, then it may be a good option to consider a debt consolidation loan. Not only this will remove your current credit card debt to a lower interest rate, but you will also add to your credit mix, so this may improve your score. Next, you want to keep your credit cards open as long as possible, as long as it's not costing you money. You really have to outweigh the risks and benefits for each credit card. But if it's just a credit card that has no annual fee, might as well just keep it open and use it once a year so it doesn't get closed due to inactivity. Now, let's talk about trade lines. Getting added on as an authorized user on your family member's account is perfectly fine and it is super helpful. But going out of your way to purchase a trade line to get added onto another person's account can lead you in a lot of trouble. Because if an account does not belong to you on your credit report, and when the lenders see this, you can actually get hit with loan fraud. So moving on, let's briefly touch on how to repair your credit. Negative items can remain on your credit report for at least 7 to 10 years. Depending on the credit scoring model that lenders use, even a paid off collections account will still be considered a delinquency and will have a negative impact on your credit score. That's why repairing your own credit can have a big bump to your credit score. So repairing credit is the process of disputing incorrect information on your credit report. If there's any information that looks questionable, you have the right to dispute it. The best way to dispute items off your credit report is doing it via mail. The reason being is that how the law is written for the Fair Credit Reporting Act, many of your rights may be waived if you decide to dispute online. Disputing incorrect information can be as simple as, this account XYZ, I do not recognize it, please remove. Credit repair can easily be done by yourself. I do have a package of credit repair letters, so you guys can purchase it in the description. But if you are interested in someone else taking care of it for you, I do offer my services. I am limiting the amount of people that I do actually work with, just due to the fact that the demand is a little bit too high for me to manage that with my YouTube channel. But contact information is down in the description if you guys are interested. But the process of disputing items off your credit report will take some time. There are really no shortcuts to this. It can take as fast as 30 days all the way up to a year. It just really depends on what type of delinquencies you have on your account. Now, let's talk about public records and how it affects your credit score. There can be numerous things such as bankruptcies, liens, judgments, and child support records that can be legally placed on your credit report. Depending on the item, some public records do not automatically report to the credit bureaus. The way that the credit bureaus do get access to public records is by sourcing information from third-party companies, such as LexisNexis. So if you have any negative information pertaining to public records, it may behoove you to place security freezes on some of these companies first, then attempt to dispute the item off your credit report. You want the credit bureaus to verify the inaccuracies for disputes directly with the furnishers, not with third-party providers. The reason being is that the majority of core systems out there, they do not report directly to the credit bureaus. So once you place a security freeze on the public records, that's when you should dispute them. If you guys want to see more specific strategies on credit, I'll see you guys in my next videos.